20-year auction that led yields to spike earlier in the session and led stocks down. Issue. Concern of
the Dow just lost over 800 points. The S&P 500, nearly 500 stocks ended in the red, and it all happened within hours of a single policy announcement out of Washington. The so-called Big Beautiful Bill was pitched as a pro-growth, pro-worker overhaul of taxes and spending. But investors aren't convinced. On Wall Street, the reaction has been swift and brutal. So what's in the bill? What sectors are getting hit hardest? And is there more volatility ahead? Let's break it down. Markets had been riding a wave of cautious. Inflation was easing, earnings were mostly solid, and investors were betting on a soft landing. Then came the bill. The proposal includes sweeping tax changes, exempting tips and overtime from federal income tax, extending Trump-era tax cuts, and increasing spending on defense, energy, and border security. But it also slashes Medicaid funding and phases out green energy incentives tied to the Inflation Reduction Act. Economists quickly flagged the numbers. Projections show the bill could add nearly $4 trillion to the national deficit over the next decade, triggering fears of higher interest rates and future austerity. Within hours, the Dow plunged nearly 2%. Within hours, the Dow plunged nearly 2%, marking one of the steepest single-day. The S&P 500 and NASDAQ followed close behind.
But you'll just have to go to the Bloomberg to check that out.
Ooh, okay. Nice tease. Easy job for me today with the decliners. I do want to start with shares of Apple falling 2.3%. It was the biggest decliner on a points basis in the S&P 500.
The sell-off spread across nearly every sector. Some were hit harder than others. Target stock dropped nearly 8% after the retailer revised its outlook downward, citing weaker consumer demand, import cost pressure, and fallout from politically driven boycotts. Executives specifically pointed to the rising cost linked to tariffs as a major headwind. Apple also fell over 2% following news of a $6.5 billion acquisition involving a startup co-founded by former design chief Jony Ive, raising questions about product strategy amid uncertain supply chains. Losers included healthcare, financials, and real estate investment trusts, REITs. All fell more than 2% as rising Treasury yields and fiscal policy uncertainty dragged down valuations. Investors appear increasingly concerned that higher government borrowing will be waited longer than expected, squeezing margins and corporate investment. Not everything was in the red. Alphabet, Google, climbed 2.8%